What's going on, guys? Welcome back to another video. In this video, we're going to be talking about Castor Maritime, ticker symbol CTRM, and if this is the right time to drop the bags, get out of this position and move on to the next one and take the L on this company. We're going to be going over all of the different pieces of news that have come out about Castor Maritime over the last couple of weeks, and I'm going to give my opinion on what this stock could possibly do in the future. Now, nothing I say in these videos is financial advice. These are for educational and entertainment purposes only, but I am going to be giving you guys some strategies on what I think could happen with Castor Maritime in the future. So we're going to be going over the Baltic Exchange Dry Index. That is very important. We have a Motley Fool article, and honestly, I'm going to debunk a lot of the things that they say in this article, but it is an article that I do think is having a significant effect on the share price. We're going to be going over the over-the-counter data to see how many shares of Castor Maritime have been traded away from the public eye, their new capital raise, and all of these ships that they are acquiring, and what this could mean for the company in the future. So before we get into all of that information, if you guys enjoy the information and analysis that I provide for you in these videos, make sure you go down and hit that like button, and if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So on the day that I am recording, Castor Maritime fell 9.39%. Now this is April 12th, so you guys are going to be seeing this the next day. I record these morning videos the night before because I have an extremely busy schedule, so sorry if any of this information or the share price is not exact, but the information is not going to change. Now, I'm not one to rely on technical analysis. I typically trade options around events like earnings or a Palantir demo day or the NEO days, but when you look at the RSI, which is the relative strength index, it tracks whether a stock is overbought or oversold. We are seeing that CTRM at the current time is massively oversold. So that could be a very strong indication that we could see a bounce in Castor Maritime coming up in the near future. Now, we have seen a very significant sell-off from the highs at the $1.95 mark. We are now trading at 46 cents at the current time that I am recording. So let's get into this Motley Fool article. We're going to go over exactly the points they make and how I'm interpreting it, and it's going to be very different from how they interpret this. So you guys do have to be careful sometimes when reading these articles when you don't really know a lot about these companies and what these indices mean. A lot of the people on the AMC stock Reddit forums and a couple of these other forums call this FUD, so it's fear, uncertainty, and doubt. So when we come over to this Motley Fool article, the BDI tracks the rates that shippers like Castor Maritime can get for hauling dry bulk goods, coal, iron pellets, and grain across the ocean. The problem is, over the last 3 weeks, the BDI has shed 10% of its value. This is true. This bad news for Castor Maritime stock, which has lost about 50% of its own value over the past 3 weeks. So let's take a look at what's actually been going on with the BDI. So when we come over here, we can see that the BDI right here is trading at about, as it says right here, 2,085, and it peaked on March 22nd. So let's take a look and see where Castor Maritime was on the date that this rate, which is supposed to be pushing this stock up so much, was. So when we come over to March 22nd, that was the date that came out. We can see that Castor Maritime was trading at about 90 cents. Now, if this rate is supposed to be pushing the stock price in all sorts of different directions, when we see this massive valley here on February 10th, we should expect to see a massive sell-off or Castor Maritime trading at the lows, right? Well, that's not true at all. When we come over here, we can see that when Castor Maritime had its peak, that was on February 11th. So when the BDI, the Baltic Exchange Dry Index, was at its low, Castor Maritime was actually at its peak. So what I interpret this Baltic Dry Exchange Index as is it's going to be a lagging indicator. So what's going to happen is that this massive rally in this index that is going to be reflecting the prices that Castor Maritime can charge for its services will be reflected in its earnings. This rate is not going to spike up and then Castor Maritime is going to spike with it. We saw a massive run up in this index, and that didn't help Castor Maritime at all, since when this index was rising, we just saw a very significant fall in the share price of Castor Maritime. So the claim that Motley Fool makes that the BDI's fluctuations are the causing factor that's sending Castor Maritime lower, that's just not the case. So we also have to think about Castor Maritime's business model. In my last CTRM video, we went over the earnings, and Castor Maritime was able to have profitable earnings with only 3 ships. They have constantly been adding ships to their fleet, and when we come over to this most recent article about their acquisitions, on April 9th, they actually acquired a new Panamax dry bulk carrier from an unaffiliated third party for a purchase price of $18.48 million. Now, when we come down a little bit further, we can see that they will have a fleet of 15 vessels. That is 12 more than they had before the pandemic. So if they are able to have more ships, do more business on and charge more due to the Baltic Exchange Dry Index increasing, their earnings are most likely going to be much better than people are expecting. So the next catalyst that I am expecting to really have an impact on Castor Maritime's share price is going to be their earnings. Now, I do think we are going to see a lot of volatility until then. We've seen some pretty significant spikes in their share price and significant decreases in their share price over the past couple of weeks, but I do think that we could stay in this downtrend. Now, for an overall trading strategy on Castor Maritime, typically dry bulk goods and shipping underperforms and they are never able to live up to these expectations. But since the relative strength index of Castor Maritime right now is trading severely undersold, and we have a lot more ships coming up. The world is starting to open up, and we've seen how important these shipping companies are due to the Suez Canal blockage. I do think that there is still upside for Castor Maritime, but I think this is going to be a 6-month to a year swing, and then it would be time to exit. Now, that's not financial advice. This is for educational and entertainment purposes only. I am just going off the typical performance of dry bulk shippers and where we are at right now in the marketplace. Now, the main thing that was pushing Castor Maritime down last week in the short term was this pretty substantial capital raise. We can see here that they raised $125 million to actually grow their business. Now, in the long term, I do think this is a good thing. That $125 million, a portion of that is definitely going to be buying new ships. They already have a fleet on a fully delivered basis, which means once they receive all of these different vessels of 15 vessels in their fleet. If they can get this number up to 20, and we see the Baltic Dry Exchange Index actually chill out at the highs, we are going to see some pretty significant growth in Castor Maritime's business. Just think about it. They have more ships. They are going to be able to charge more, and we've seen how important these shipping companies are going to be in the overall world economy due to the Suez Canal blockage. Now, when we come over to this revenue prospects, we can see that in Q4 of 2019, Castor Maritime was actually profitable. Now, coming down into the first quarter and the second quarter of 2020, they were not in the profitability marks. Now, if we can see Castor Maritime get into profitability in their earnings, this is going to be a very big deal. People are going to see this more as a better, sound, strong, long-term investment. Now, what I say next is not financial advice. Again, these are for educational purposes only, but I do think that Castor Maritime is going to be a decent swing trade on a 6-month to 1-year period. Now, the reason for this is that it's setting up perfectly. We have the RSI at an extremely oversold level, and we also have them acquiring more ships. The world is opening up, and we are seeing some pretty significant growth in their fleet. But as I've said before, that since dry bulk shipping companies typically underperform expectations, I would not suggest to anybody, I would not do this myself, put this company into one of your really specific and long-term portfolios that you have a lot of conviction in. I do not think this is a company for that. I think this is more a company for a trading portfolio or somewhat of a gamble where you have some money sitting around and you want to put it in a company that has a huge potential for massive growth, but you are okay with losing a significant amount of money. Now, do I think that Castor Maritime could break all-time highs and shoot up a significant amount if they come out with their earnings, more ships, and they're bringing in more revenue? Absolutely. But at the current marketplace, it's going to be very difficult for them to do this, and they are going to need to get a lot of bullish investor sentiment behind them in order to significantly increase their share price. Now, we also have some over-the-counter market data. We've seen a lot of trends with this. Citadel is typically in first place. In the total shares that were traded on the over-the-counter market for Castor Maritime in the last period reporting for February was about 2.5 billion shares. Now, a lot of these shares are most likely filled and traded on behalf of retail traders like yourself when you trade through brokerages like Robinhood or Webull. So these numbers don't really mean that there was a lot of manipulation going on. It doesn't prove anything. It just tells you that there was a lot of action going on behind the scenes that are hidden from retail investors. So what this says to me is, hey, there's a lot of volume occurring on these over-the-counter markets. So there's a reason for that. They're probably trying to hide something from us, and there could be some manipulation going on. There could be entering some pretty significant short positions in a couple of these companies, but the key thing is that we don't know. That's the point of these over-the-counter markets. So let's wrap up this video with a conclusion on whether or not it is time to get out of a Castor Maritime position. In my opinion, again, not financial advice, no, this is not the time to get out. We've seen a significant sell-off in the market. I don't know what price you guys were able to get in. I know a lot of YouTubers were talking about this stock when it was trading at 20 cents or 30 cents. So you guys are definitely trading and have a position with a gain at the current time. So for you specific group, it could be a good time to get out. Take your profits off the table and then go into something else. But for people who have a significant loss with these companies, you have to expect some sort of loss like this. They're extremely volatile penny stocks, and you really have to trade with an amount of money that you are willing to take a significant hit on. Now, I've said this a lot in my other videos that I do think that Castor Maritime, although it's very speculative, has a lot of potential, which is why I think it could outperform expectations in the year 2021 and maybe in the first quarter of 2022. But after that, I do not think that there is a massive potential for dry bulk shipping to succeed. So that is going to conclude this update on Castor Maritime. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. And speaking of options, we are getting close to earnings season, so I'm going to be putting out a lot of my options plays that I'm going to be looking at. I'm going to go through the entire earnings calendar and price out what the market is going to be pricing in for a company's move on their earnings, and I'm going to give all of that information to you guys in my video, so make sure you keep a lookout for that so you can see the strategies that I use to trade earnings. So that is going to conclude this video. I hope you guys are having a really profitable day, and I'll see you guys in the next video.